As the CBN's March 2026 deadline for banks recapitalization nears, concerns arise about their ability to meet up, saying that only about 11 of Nigeria's over 30 banks have announced successful completion of their respective capital raising exercises. While Tier 1 lenders appear well positioned to meet the requirement, SBM intelligence warns that Tier 2 banks face increasing pressure to scale up or risk being swept into a wave of mergers and consolidations. To unpack this, I am joined by Ayokunle Olubunmi, Head, Financial Institutions Ratings, Agusto Co. Thank you, Olubunmi, for joining me today.
Good morning. Thank you for having me.
All right, good morning to you too. Well, in this particular report, we're referencing SBM Intelligence posited that Tier 2 banks in Nigeria are under pressure to meet CBN's 2026 recapitalization deadline. 6 months to the finish line, is that what you see too?
I think I will slightly disagree with that submission, and because if you look at it, in terms of, you mentioned earlier about 11 banks have crossed the line. Out of those 11 banks, it's just 3 that are in the Tier 1 bracket. The other 8 are either Tier 2 banks or Tier 3 banks. Even if you look at the amount that we're talking about, you notice that the 2 Tier 1 banks, the amount that they need to raise is even surpassed the amount that even the Tier 2 and Tier 3 banks will actually even have to even raise, right? So if you look at it currently now, what you see is that almost all the banks, excluding those that are under the CBN ownership, a lot of them are at par with their capital raising plan. So I don't think the Tier 2, of course, there will be 1 or 2 cases, but I think a lot of banks are in line with their capital raising plan.
That's quite interesting and optimistic. I mean, talk to us. You talked about, maybe just 1 or 2. You mind sharing the likely banks we're looking at? Because I want to believe you have insight into, some of these banks and their plans. Tell us what's happening. What are they up to?
Okay. Maybe we should take a step backward. At the beginning of the exercise, about 4.1 trillion is needed by the banks to be able to meet up with these recapitalization exercise. And so far, based on our findings, about 3 trillion has been raised by the banks, largely from domestic investors. A lot of us underrated the level of support that Nigerians and the confidence that Nigerians have in the banking industry, right? So what we are saying is that a lot of them are actually being able to raise this particular capital. Let's also not forget that this is a marathon. Although we have 11 that we are saying now, there are some that some of them are almost closing the gap. Some of them are even with CBN trying to even verify their capital. So a lot of things actually even going on, such that don't be surprised by the next 1 or 2 weeks. Your list might have expanded up to even 25 or even 30. I think we'll see a clearer picture as we are gradually getting into the year end. And even the thought was that by now we'll be hearing whispers of mergers, acquisition, but now largely everything seems quiet. Everybody seems to be focusing on trying to even raise the capital. From what we are saying now, the non-interest bank just need 20 billion. The merchant banks and the regional banks just need 50 billion. And even the national banks, right? A lot of them just need 200 billion. It's not as high as what the Tier 1 that largely international banks have to raise.
All right, so from what you're saying, we shouldn't expect any form of, license downgrades. And even when we look at mergers and acquisitions, we should just limit it to the ones that have already announced what they are doing. That's Providus and Unity Bank. We shouldn't expect any of this happening to the other remaining banks. Is that what you're saying?
You know that this thing is a marathon, like I said earlier.
A marathon and that has about 6 months. Does that sound like a marathon anymore? I would have thought a marathon, is something that is in perpetuity and never ends.
But remember that when you're watching a marathon, in the last lap, a lot of things might actually even change. Somebody that is even the first can even end up being the third, right? But as at today, as at now, everybody seems to actually even be focusing on even generating the capital themselves, right? Except for the merger, I think one other bank has mentioned a downgrade of their license. Of course, this discussion excludes the banks that are under CBN ownership, right? And even the merger between the Providus and Unity transaction predates the recapitalization exercise, right? For those of us that are following the news, right? But for most of the banks, the talks of merger seems to be relatively to be low now, right? At least talking to all the industry players, seems to be low now. But however, for those that are struggling, because recall what I said earlier, a lot of Nigerians, investors are willing to back the banks. The question is for you that you're the owners of the bank, what's the level of control they are willing to cede? Are you willing to, how much control are you willing to cede to new investors? You want them to even come into the banks, right? And from the discussion that we are saying, it seems to be low. Then also forget that the big banks, a lot of them are not eager. Maybe this is one of the things that even made this exercise this time around a bit unique. A lot of the big banks are not eager to even acquire the smaller banks, right? Maybe because of the, if I can call it the PTSD from even the mergers that we've had in the past, right? So a lot of the big banks are trying to focus on their own, let's say, just management size. Having said that, I believe that in the near term, probably 2027 thereabouts, we'll be having some mergers in the industry, because then we'll be seeing the impact of the capital. The banks that are bigger will be seeing the impact of their scale in their earnings, in their profitability, right? But for this particular exercise, if we have a merger, maybe one or two are fine between, but now everywhere seems quiet in terms of merger. And if we see a downgrade in terms of licenses, we've seen one, right? But I don't think we'll see more than two. That's what specifically.
All right, let's get a bit specific here. What do you make of FCMB's plan to divest 25 to 30% stakes in Credit Direct and FCMB pensions in a bid to meet up with this capital, raising exercise?
I think that's the planned divestment or selling of minority stake in these companies. It shows the financial flexibility of the companies, are the holding companies, right? Because they have various companies in their holding company group that they can actually even reduce their stake. Let's not forget that FCMB is listed, right? They could have gone the route of having a public offer. They could have done private placement. But what they are doing shows that, look, they have a lot of options. Unlike some other banks that are either focusing on only either public offer or only private placement. It shows the impact of having good companies, right, within the ecosystem of your holding company, such that if you need capital, if you don't want to raise funds directly, you can just sell a minimal stake in those companies, raise funds, get into the bank.
All right, you might want to consider, there are those who are looking at the possibility that the CBN's directive that banks should exit forbearance regulation could affect capital raising exercise. Do you think so?
Let's not forget that we've had various shocks during this recapitalization exercise. Let's not forget the windfall tax came up just as the banks were actually even raising those capital. But the banks are able to even withstand that. But I think for investors, those of us that have looked at the books, we realize that, look, this exit of forbearance, it will have a short-term pain, if I can even call it that, right? The impact is just going to be minor, right? And then the banks will actually even try it, because the exit from forbearance is not something that just happened all of a sudden. Although it was fast-tracked, but the banks were already even planning for it. And even thankfully, with what we are seeing with oil prices, and with what we are seeing is with even relative increase in Nigeria's production, given that the bulk of the forbearance facilities are the oil and gas sectors, the performance of those some of those loans have actually even improved, such that they'll be able to restructure it and what have you. But in summary, I don't think it will have any major impact on the banks, because serving investors realize that, look, if you have any impact, the impact will largely be in 2025, right? Obviously, the industry's profitability will dip, right, because of increase in impairment. NPL ratio will even go up. But by 2026, 2027, all those will be moderated.
All right, let's close with this. A bit of a deviation, but of course, I bet insurers' plan to raise capital has nothing on these banks. But isn't it concerning, rather, for the insurers, given the limited time they have?
Yeah, I think I will say yes, and I will also say no. Okay. Right. First, if you are looking at the scale of the amount that the insurance industry needs, it's not up to the scale of which the banks are actually looking for, right? And based on our own estimates, just about 700 billion. That's all the insurance companies would need. Don't forget that I said that the banks were looking for 4.1 trillion. So there's a difference in terms of scale, right? Having said that, the timeline for the insurance company is actually very short, right? The plan is that by May, June next year, the recapitalization exercise is going to actually be rounded up. However, Note that NICOM only issued the exposure draft, right, in which the industry is still trying to even push back, trying to see how they can increase the how they can lengthen the time. But having said that, let's not forget that this act has been in the National Assembly for over 2 years. So what you see in a lot of insurance companies also is that from the back end, they're already making preparation, right? And even there's already an idea of what the capital base will look like, how much they will need. Some of them are already having preliminary discussion about even raising the capital. So you'll be able to address this recapitalization exercise.
Okay, maybe I will take you on that some other time then. Thank you so much, Ayokunle Olubunmi, Head, Financial Institutions Ratings, Agusto Co, for sharing your thoughts with me.
Thank you for having me.